What's up, everybody? Michael Silva here. All this chop today. Is the market stalling out potentially until we find out who the Fed chair is going to be? Biden is going to be releasing that information supposedly at any time here, and perhaps it's going to be, what's said is before Thanksgiving, and we have obviously a holiday week coming up ahead, so a shorter trading week. Is the market stalling out? Well, all that and more on today's Stock Market Brief Show. Let's get into it. All right, everybody, welcome back. We're going to take a quick look here at yields. As you can see, the 30 and 20 still remains to be inverted, which is never a good sign to have inverted yield curves. You can see down here the 30 and 5 spread. This is continuing to kind of trek itself up a little bit, which is typically good for financials, but we just haven't seen financials perform here recently. They're pretty much stalled out. And then you can see the 10 slightly rolled over today, the 5 slightly rolled over, and the 3-year also slightly rolled over. Nothing too crazy to talk about here. Meanwhile, if you just take a look at the TNX, it's pulled down obviously just slightly, but it's still up on the week, and it's still butting up against that area of resistance of this inverse head and shoulder pattern that we know that if this thing takes off, it could put a lot of pressure on the tech stocks. Let's continue on to the TLT. This is Treasury Bond ETF. So if yields continue to fall, this can break out. And it's looking like it's, might be getting ready. This is a pretty tight wedge pattern right here as price pulled down into a previous area of resistance, which was resistance there, resistance there, resistance there, and then it gapped above it. So this could act as support. And if you take a look at this candle right here, it gapped down and then it finished on the high. That's a bullish looking candle. So perhaps this is ready to just break out of this, right back into this previous area of resistance, which is right at around 151. So that is something that you want to watch for on the TLT. Meanwhile, the dollar today tagged the target and then slightly sold off towards the end of the trading session. The dollar on the daily time frame here put in a shooting star candle, and yeah, it might be getting overheated as we stated yesterday. It ripped up. Now perhaps it's going to take a little bit of a cool off period or consolidate. And as you can see, when it did sell off throughout the end of the day, after hitting its price target, gold did do quite well. Gold actually gapped down on the day and finished at its high of the day, so another bullish looking candle, but it's still relatively in a period of consolidation. It was up almost 1% on the day, so played out all right. Silver also up on the day, about 1%, still within this consolidation. Got to get above that 200-day moving average, which is at 25.50, we're going to call it, round up a slight. And if it does get through that, there's no reason why this bull flag can't meet a full measured move right at around 28 to 28.50. So that's what I'll be kind of watching out for. As we stated, if the dollar starts sinking and gold and silver start performing that, also gold miners can be something to keep an eye on. They trade very differently compared to regular equities, so you got to be obviously careful, but I've been seeing some pretty decent setups overall. Let's take a look at the market dashboard. The market dashboard, what do we got going on? Well, everything was down pretty much on the day other than the VIX, right? The fear index, the market gauge there. Down 0.5% on the Dow Jones, S&P 500 down 0.26. I'll rattle this off because we probably already know most of that. Let's look at the 11 sectors. That's what I want to kind of key in on. Real estate was the top performing sector, which I'll show you a chart. This was really weird price action today. Energy down there at the bottom, mainly driven by oil, which we'll get into that chart too as well. And then tech was the middle of the road. If we see more weakness in tech, market probably all here would be more deeper in the red. But that is not what we saw, because why? Well, yields kind of took a breather today. They didn't rip like crazy. And as previously stated, on the previous episode, we were looking at some big names like Tesla, Nvidia, and so forth. And, if those things stall out, they can hold the market kind of in place for the most part. Now, if we take a look at XLRE, this was the weird price action. So we had a quick sell-off during the day on the 2-hour time frame, and then pow, just 6 hours right after the sell-off, straight up to become positive on the day. So just a V-shaped recovery, but still remains relatively just in this trading channel as such. Boom, 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 boom. So if we start breaking out to all-time highs, positive thing. But as it stands right now, we're just range bound. Let's continue on to the next slide. This is XLE Energy. Now, we really need to see energy perform here soon, because there's a lot of good energy setups out there, but this right now is not looking all that great. Let me explain. First off, we have a test of support right here. That's 1. We had a test here. That's 2. Test here. That's 3, 4. We're going to call that one 4, but it looked like multiple times. Oops. 4, 5, 6, and then this is the 7th time. You know, the more times it's tested, the weaker this can become. And if we do start breaking down from this channel, a full measured move of this little, you know, this rectangle right here, this little just consolidation could bring us down. This is 57 to 59. That could bring us down a couple of dollars for a full measured move of that. So 57 right here to around 55. So be careful here in energy stocks, especially taking a look at oil. Take a look, oil was down almost 4% on the day. That is a big move right there, and it broke out of this period, this area of consolidation. So we thought maybe we can hit back up in this channel. That'd be good for energy. It gapped down, and then it closed through this and got below the 50-day moving average. Now, in the longer term, you know, picture here, we have obviously decent, you know, it's in a decent uptrend, right? We have a low, a higher 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 low, or even a higher low right here. Okay, we'll X this one out. And then we have a high, a higher high, a higher high, a higher high. However, in the short term, this is how trends change. They start to put in lower highs and lower lows. And as you can see, that is what's taking place currently. So is this the beginning of a move lower in oil? Well, it's to be determined at this particular point in time, but this is not something that I'd be rushing into after a move like that, at least in energy stocks. Now, if oil is going to be backing off, that typically could be good for airlines. Why could that be good for airlines? Well, airlines, their biggest expense, oil, right? So perhaps if oil is going to be falling down or coming down, this is a possibility where airlines benefit. Okay, you can see that there sometimes could be a negative correlation there. And if we're looking at jets, I'm not going to show any individual airlines at the moment, but we had resistance, resistance, we've had support, so it's been within this trading range, and now we're pulling down multiple days in a row. Perhaps we're going to get a little bit of a relief move here very soon in this ETF. This is US Global's JETS ETF. All right, let's get into the S&P 500. S&P 500, inside trading day, still, I mean, yeah, we saw a little bit of sell side, a little bit of chop. Is the market stalling? Are we going to see some more sell side activity? It's a very big possibility, but we've got to zoom into a couple other charts just to give you the bigger picture here, and smaller picture and zoomed in picture, but the weekly time frame. Let me point this out, okay? First off, nice big week right here, okay? Then we had an inside trading week right here, and now we're currently sitting with an inside trading week where we did move nowhere. This is a stalled out move right here, so it's indecision, but we have a couple things to call out, okay? In the short term, it's very hard to be bearish at price action here. Yeah, it can sink, but we have a low, a higher low, and right now a higher low too. And then the 5-period EMA, which has acted as support, is getting above the low of this previous week. So even if we get this little sell side activity into the 5 EMA, it would still be inside trading week. Okay, so yeah, the 5 EMA is at 4637. So perhaps if we get some sell side activity, that could be a potential pivot long area. I mean, you'd be hedging long here with the hopes that we obviously break out and continue to head higher. Okay, yes, we're right there at the upper Bollinger Band, but we've been seeing multiple times it just hasn't really hasn't mattered in this market. However, if we start breaking down below the low of this week, then we just got to be a little bit more careful, right? That means we'd be closing below the weekly 5 EMA, which would be a good sign for the bears to really step up and do some damage, which they have not been able to do pretty much, you know, all year. Let's continue on. 2-hour time frame. 2-hour time frame, the 20 EMA is holding. Perhaps if we break down, we have the 50 EMA that has acted as support here before, and the 50 EMA is at 4660. So that's another key pivot level to keep a close eye on. If we go into the 15-minute time frame, we have a possibility of a head and shoulders pattern right here. This is very short term, but we're above the 5-day moving average, and you can see the neckline is an ascending neckline here. So if we start cracking down through that, I would say we got to get below the 5-period EMA. Now the PMO, it's under 0, so that's bearish, and if it starts obviously curling down like that, we can definitely break down. Now, another thing that we can potentially call out here is the possibility for a little bear pennant. So if we start breaking down, full measured move would be from right around 47.15, 46.85. Okay, so we'd be looking at probably just right around, I mean, quick math is probably right around 460, 55, so or maybe just a little bit above in this zone. And that actually lines up with this volume shelf profile and this previous price action here. So 46.60, which happens to be what? Right? We just talked about it. 46.60. 46.60 is the 50 EMA on the 2-hour time frame. Pretty spot on, right? Pretty cool stuff. So that is a more confluence of support if we were to potentially break down. Now, the VIX, we did break out of this wedge. We started tricking up higher throughout the day. You can see that the VIX has been putting in higher lows, and there's some pretty solid resistance right here at 1725. And it looks like it's honestly getting ready to launch off, right? It really does. And we'll see if that takes place. I mean, in order to have a VIX crush Friday, they got to run the VIX up on a Thursday. So the potential target here, if we get a spike in volatility, could be around 18 to 1875, this zone, maybe higher. You know, it's too hard to predict that kind of stuff, but it does look like it has the potential to spike up higher here. And if it does spike up higher, like I said previously, the pivot areas that we're going to be watching would be the 50 EMA on the 2-hour time frame, that 46.60 level. Okay. Now, a couple indicators that I want to call out here. I haven't talked about this one for a while. I learned this by Tim Ord a long time ago, and really it's just a negative divergence. We're looking at the ratio between the S&P 500 and the TLT. That is the yellow line right here, this yellow chart, and then the S&P 500 is below us. That's the red one right here. Okay. What I'm seeing is a negative divergence between the two. So this is when the S&P 500 rate, so I'm just going to say the ratio has a high and a higher high, and then the S&P 500 has actually a high and a lower high. So the two are diverging. Now, you might be thinking, why is that important? Well, let's look at just at previous times that has happened recently. Well, right here, we had a high, higher high, a high, a lower high, and then we got some sell side action. Now this also works with positive divergences. You can see that you need a low and a lower low versus the S&P 500 having a low and a higher low. And then you could see it ripped up, and we had the same thing here where we had the negative divergence, and then it shot up there too as well. So it's a very small divergence. I don't put too much weight on it, but it is there. So I figured I'd call it out. It doesn't tell you how far it can go down or anything, but you know, something's a little skewed. And then we looked at the TLT. It's in that wedge pattern. It looks like it can burst up. Hey, potentially that's a little bit of firing power to stall out or consolidate the S&P 500 or even bring it down. And we'll get into the big stocks, the FANG stocks here just momentarily. The sell signal I haven't talked about for a minute. This is when this black line crosses through this 0.8, this red line here. It has to cross through from the bottom through to the top. And as you can see, you know, we crossed through here. That brought some sell side activity there. Right here, that sold off a little bit there. Right here, we sold off just a little bit right here. Right here was pretty much a false signal. Man, that didn't really do anything right there. And then there's more times throughout history that this has happened, but this is something that, it doesn't mean that the market's going to crash or anything, but what it does entail is, hey, you know, maybe you should consider taking profits or update your stop losses, put on some hedges, whatever the case may be, however you determine is fit for you. This is the negative divergence on the NIMOT. It's currently playing out right now. We talked about this one yesterday. Sold off even further, right, down on this indicator, the McClellan oscillator, and you can see the New York Stock Exchange had some sell side taking place today. All right, let's get into the Russell 2000. Before I get into the chart, I want to show the exposure breakdowns and why this is important, because somebody asked me today, hey, is the Russell 2000, is it going to turn back? Is things looking good? Well, one way to determine that is really paying attention to financials. Financials make up, and healthcare too, I guess, too. But financials, to me, are very, very important, not only for the overall market, but including the IWM. So let's focus here on where financials stand. If you know my view on financials as of these recent videos, the KRE has been looking pretty solid. However, today, you know, it was down almost 1%. However, it still remains within this channel, this rectangle, this trading channel. So when it comes down to the lower range, we bounce. When we get to the higher, we sell off. And this, honestly, it potentially also financials might be on pause too until we find out what goes on and who's going to be the Fed chair. And then we got to see how the market reacts. So this could be also stalled out. However, if this continues to obviously sell off, that could be not that great, obviously, for the IWM. So that is something that we want to pay very close attention to. As it stands right now, we're okay, and we're going to get into the absolute performance of the IWM right now. So the IWM, we broke out. That's solid. We came down to the 20-day moving average, tagged it today. Looks pretty good. Overall, actually, too, it looks like it's kind of in a tight little wedge pattern or flag pattern, pennant pattern right here or something like that, right? And then it looks like if we start getting some traction and breaking out and getting above this 241 range, bam, we can fire off again. Okay, so that's something to pay attention to. If we look at the 2-hour time frame, you can see it a little bit more clear. The MACD got below 0. I would want this to start turning up. You can see the histogram starting to turn up, so that's a positive sign. We had a hammer candle right here. Then we have an inside trading candle. The following candle, you want to recoup this, 20 EMA, this 50 EMA. That'd be positive, and get back above this 239, 240 range. And that could be, once again, very good for small caps. But we need financials to really help with that. If you take a look at the 15-minute time frame, this looks actually pretty good. Now it's below the 5-day moving average, so short term, bearish to rather neutral, right? However, what I do want to call out is the positive divergence on the RSI as well as the PMO. So as price action is going lower, right? Lower highs, lower lows, we have momentum in the RSI and both the PMO starting to put in a higher low as well, which means that if this shows strength continues and it plays out as a positive divergence, we recoup this 5-day moving average and we start firing back off to try to take out that 244.50 again, okay? But on the short-term bearish, like I said, we're below the 5-day moving average, and we have the possibility that this little tight pattern right here is a bear pennant, and if that takes place, well, we crack down through that and we probably come down to around 232, and if we come down to 232 on a full measured move of this bear pennant, where would that put us on the daily time frame? That would put us right here in confluence with the back test of this breakout, right? So, hey, maybe we do break down there, but then maybe the bulls step right back up and it creates just a big hammer candle on the day, and then we bounce. That'd be pretty awesome, right? All right, let's get in the Nasdaq 100. Let's look at the heat map. Rather flat on the day. Tesla, a shining star again. Is this thing going to unwind? I don't know, but we kind of talked about Tesla yesterday, and we'll get back into that today. Google rather flat, Amazon rather flat, NVIDIA was down on the day. What we need to pay attention to is obviously going to be NVIDIA because they're reporting on earnings, and I'll get into that chart here momentarily. So let's just hop into the Nasdaq 100. You can see it's at the upper range of the channel, and it presented itself a nice little shooting star candle right there. We're going to start turning back around, and if we do break down to an all-time high, it will happen on a negative divergence. So that is kind of the risk right there. So we'll just continue to monitor that. If we zoom in here on the 2-hour time frame, we're above the 20, above the 50. Things are looking fine right now. It's still in bullish context. Like I said, if we get a new high, it's going to happen on a negative divergence. But yeah, could be potentially a double top, right? But it's in bullish context, and it's just within this trading range, right? And we haven't really gone anywhere. So it's up, back down, back up, maybe back down, Or perhaps what can happen is we can have this low, we have this low, we have this low. Perhaps we come down, create a higher low again, and we just the bulls keep progressing up towards this line until we coil up tighter and tighter and then break out. So that would be the bullish kind of view there. I would still be just watching the 50 EMA on the 2-hour time frame as it stands right now. Okay, let's go into the 15-minute time frame. We're above the 5-day moving average. You can see the price action a little bit differently, right? Perhaps this is a wedge or up channel right here. So watch out for the breakdown. That's always a possibility. The PMO's turning down. RSI is below 50. So yeah, we might get some sell side stuff, but just keep an eye on the 5-day moving average. That would be most beneficial. I forgot to change this over to the Qs, but that's totally fine. Now let's look at NVIDIA. So NVIDIA reported earnings. Now this is funny to me because we have this sell-off, and we're paying attention to this pennant, and we're also looking at relative strength yesterday. So the pennant, the relative strength, everything was looking good, and then we had the sell-off intraday into where? The 50 EMA, and then guess what? After hours, after reporting earnings, we shot back up, so it's looking pretty good overall, which could be a big mover, a big player come tomorrow, and you can see the MACD kind of turning up there too. Now, this is weird because, it broke down through this pattern, and I've said this too many times and noticed it too many times that a lot of these stocks, it's earnings season's been so weird, but we've been seeing these they sell off into earnings, and then when earnings come out, it just rips. And we might see another one like that, right? I mean, if you're wondering, well, what stock? Just take a look at Playboy, right? This is one that I played personally. I didn't hold it to earnings, but I bought it right here. Literally to the T, right there, bottom tagged, and then I sold it some right up in this range right here on pretty much, I think, around this day or this day. And that was about a 30% gain. So it played out really well. And now, why did I not hold through earnings? Well, first off, a 30% gain, I didn't want that to become a losing trade for one, but for two, I would have trimmed the position severely anyway because I don't like trading into earnings. That's just my kind of, it's just how I manage my risk. But look at here, the candle. Sold off, and then just gapped and ripped throughout the entire day. So are we seeing something else like that again? It's a very strong possibility. It's hard to determine and hard to say, but as it stands right now, that's exactly what happened with Nvidia. We sold off, and now we're starting to see that rip after hours. And if we start breaking out to all-time highs, I mean, this thing could really take off, and that would actually hold the overall markets probably together because the implied volatility with Nvidia and even Tesla, they're big players. If you take a look at the next chart, Tesla, we talked about this potentially coming back and tagging the top. Well, we didn't get a 2-hour close there above the top, but we did tag it, and now we're kind of, doodling around right now. So is this thing going to continue to just range-bound trade, or are we going to break out through this and head higher, and then, the Nasdaq and the S&P 500 will probably go, a lot higher from here if that's the case. So that is something that we want to continue to pay attention to. Meanwhile, we're saying be careful with, this stock. I don't know why the chart got all weird. Let me see if I can, whatever. We're talking about this chart. Yeah, you don't want to chase up here, right? Well, because, you'll eventually get some sort of an unwind. Well, down 15% on the day on Rivian. And you can see here, it's not really selling off. It is selling off actually quite a bit after hours there. So if we start cracking down through 140, it can continue to unwind. So just be careful, obviously, with this stock. And then you have Lucid. This one sold off too. We had this full measured move, right, which we discussed yesterday. Full measured move, tagged it, and then we sold back off right there. We'll see if that continues to sell off. It's down in the after hours session. Just another big name with just incredible amounts of option volume being traded. Apple broke out of the pennant. We're starting to pull back slightly. So that's a bullish breakout, right? Overall, it's pretty darn bullish. Maybe perhaps we come back to back test. Bam, and then we continue to head higher here for Apple. So not looking too bad overall. Microsoft continues to press higher too as well, and it's holding above those moving averages. And then even Google managed to eke out a little bit of a gain, but it still looks like a possibility for a short-term topping pattern here. If it can start breaking through this neckline. If you want to look at from a bullish perspective, you'd want to start looking at this as a possibility for a little bull pennant right here. And if that's the case and we break out of this 29.75, that takes us to another all-time high for Google. So, overall, the market doesn't look all too bad right now. There's a couple negative divergences, which we're coming into our conclusion right now. Like we said in some of the indicators, negative divergence, things are unwinding. We have, the Fed, we have the market potentially stalling here, just waiting for the news around who might be the Fed chair. We have Thanksgiving week next week, so, potentially less trading volume around. Maybe this is just a pause before a larger move to the upside, and that's what we need to at least be prepared for. I don't see this as all of a sudden just some crazy crash right now. But, you got to be prepared for that too as well. I'm easing to more of, this is a stall out week. We might pull back a little bit more. I looked at those key pivot areas. And then after this week and next week pass, perhaps we rip a lot higher. That's all I got for you on today's episode, everybody. See you later.